This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. A cautious start to the week seen for Asian markets with China's monthly activity data out later, along with a PBOC rate decision. Also ahead, Microsoft sees Japan accelerating its use of AI with an investment worth almost $3 billion. We hear exclusively from the president, Miki Tsusaka.
And I'm Paul Allen in Canberra, where Chinese Premier Li Qiang will meet Prime Minister Anthony Albanese in a visit that caps a rapid revival in relations.
Let's get you straight to today's agenda. And we've been watching inflation expectations from the University of Michigan hitting the highest in 30 years. And of course, this just feeds into, Shery, these broader expectations of what we see from the Fed, even with some pretty consistent messaging from Jay Powell and some other Fed speakers. We have seen markets continue to expect more easing than what is actually being flagged by the central bank throughout the course of this year. Take a listen to the latest that we've heard.
We're going to get to 2%. I'm telling you, that is what we're going to do. And if you look at the last month, we did it. But that's what we got to do, and we are going to do it.
It's going to take some time to get inflation back to 2%, all the way back. So my projection is that we probably won't get there until 2026, but we'll see progress continue in my modal view. And that's enough, right, to then say, okay, it's time to start the process of bringing rates down.
Some of those more hawkish comments really being taken by the markets, with the dollar gaining ground for a fourth consecutive week. Of course, we also had some flight to safety given the political risk in Europe. This is the setup across Asia right now. Of course, we had pressure across Asian currencies, especially the Japanese yen, given that we didn't get necessarily a lot of details in terms of that reduction of bond purchases. Nikkei futures not doing much, as we're very firmly focused this week as well on the RBA rate decision. Really not much expected to happen on the rates to be held at that 12-year high. Sydney futures down 0.2%. But take a look at the setup in U.S. futures coming online in the Asian session, because we had a lot of volatility last week. Stocks were down, bonds were up. Really that flight to safety continuing as we have seen that drama unfold in France and European assets taking a hit. But also we had data showing that consumer confidence plunged by the most in 7 months in the U.S. Not surprising, given that we are seeing those price pressures. U.S. futures really not doing much, but of course tech futures slightly higher to 0.1% right now, Heidi. But geopolitics center stage this week as well.
Geopolitics and panda diplomacy, Shery. You know we love to talk about that, but that was just one of the highlights. Chinese Premier Li Qiang set to meet with Australian Prime Minister Anthony Albanese in Canberra on Monday, as well as second largest economy seeks warmer ties. Bloomberg's Paul Allen joins us live from the Australian capital. Paul.
Yes, you can probably see behind me there's a reasonable sized crowd of supporters of Li Qiang. Also a few protesters in there as well, but I'd estimate there's probably a few hundred people back there waiting, hoping to catch a glimpse of Premier Li Qiang. Now, it's a busy agenda for the Chinese Premier today. First up, there will be that meeting with Prime Minister Anthony Albanese. And in about 30 minutes' time, we are expecting some joint remarks from the two leaders. From there, the pair will have lunch. Then Li Qiang will meet the Governor-General and then on to meet the Leader of the Opposition, Peter Dutton. Now, that meeting's taken on some added poignancy today because Peter Dutton has just overtaken Anthony Albanese for the first time as preferred Prime Minister in a Resolve poll, which was conducted over the weekend. The coalition also been polled as being favoured to better promote Australia in terms of national security and defence. It's worth remembering that it was under the previous coalition government that relations between China and Australia sank to this low. But this visit today from Premier Li Qiang really is the high watermark in a rapid turnaround of those relations.
Yeah, there's a lot of optimism about potentially warming ties here, but at the same time, Paul, we have lots of friction points left.
Yeah, that's absolutely right. If I want to talk about the good stuff first, Li said that this relationship is back on track. He said Australia is uniquely positioned to build a bridge, if you like, between East and West. And of course, there's a couple of new pandas on the way as well for Australia. We'll talk about that in a moment. But yes, you're absolutely right. Tensions do remain. Anthony Albanese says he's not going to hesitate to bring up some of those tensions. There have been some recent clashes between the two militaries in the area of the South China Sea. It was only a month ago that Australia accused a Chinese fighter jet of firing flares dangerously near to an Australian helicopter. And then there was the matter of Yang Henjun, an Australian writer who is detained, facing a suspended death sentence in China right now. That issue will be raised as well.
Paul, to sort of what are the main issues? Obviously, pandas, right? We know that the two that Adelaide have, Wang Wang and Funyi, are probably going to head home, but they are going to be replaced?
They will be replaced. They're heading home after, I believe it's 15 years, mainly because they failed to produce any offspring. Pandas, of course, are notoriously shy when it comes to breeding, but those pandas will be replaced. It kind of seems like fun, but panda diplomacy is very important. It is very symbolic. It is another way of demonstrating that trust between these two nations has been rebuilt. Also, we saw that on show yesterday or earlier this week, well, it's 2 days ago now, when Premier Lee was in Adelaide, where he also visited Penfolds Winery. Now, it was only earlier this year that those trade strikes against Australia's wine industry were lifted. And there we have a Chinese premier visiting an Australian vineyard. So there's only really one trade strike remaining now, and that is against lobsters. It seems logical that we might see that lifted also when the premier heads to Perth next and Western Australia next, which is the home to significant lobster fisheries, but also the home to significant mining interests. The premier is going to be visiting a lithium mine out there.
Right. We'll be watching the latest unfolding from that trip. Bloomberg's Paul Allen there with the latest on that visit by Premier Li Qiang. As we also continue to watch geopolitics, Heidi, in Europe, of course, we are headed towards the French snap elections, and we are now seeing the polls showing that Marine Le Pen's national rally, the far-right party, is still maintaining its lead with 35% of the polls. And we're also seeing the left-wing Popular Front at 26% versus 25% in the previous poll. So we continue to watch the developments around what happens to President Emmanuel Macron. Remember, we had a lot of volatility in recent weeks because of speculation that he might resign as president of France. Macron has subsided those worries, telling that he would stay in the position. And we're now hearing from Marine Le Pen that she won't try to push him out as well, Heidi.
And Shery, we know it was a really jam-packed schedule for global elections, even without surprise snap elections, right, including the UK elections that are taking place on July 4th. And we are looking at really a historic wipeout when it comes to Rishi Sunak, the Conservative Party, headed for that result on July 4 when the nation heads to the polls. We've seen 4 surveys indicating the depth of voters are discontent with Sunak. Sunak's telling the Sunday Times that they have had a very tough time. One poll predicting that the Labor opposition will win a 262-seat majority in Parliament, with the Conservatives cut to just 72 seats. Another poll showing that Labor has a 17-point lead. So we know that polls can be incorrect. We've been sort of taught that heavy lesson a number of times over the past few years, but these figures do just illustrate that weak positioning for the Conservatives and for Rishi Sunak going into the campaign, and how much it's really deteriorated since he called that surprise vote 3 weeks ago. So this does look like the worst defeat for the Conservatives since the formation of the party 2 centuries ago, Shery.
Yeah, so much political risk to keep an eye on. On top of monetary policy risk, right, we do have the Bank of England policy decision this week to watch out for as well. Coming up on the Asia Trade, Oxford Economics shares their outlook as traders look ahead to Tuesday's RBA rate decision as well. HSBC talks investment strategy following the BOJ's decision to keep rates unchanged. And we'll also have more on Premier Lee's visit to Australia with the University of New South Wales. More ahead on the Asia Trade. This is Bloomberg. Let's take a look at the week ahead. It's another big week for central banks. Bloomberg Economics sees China cutting its MLF rate later today. They expect activity data for the month of May to highlight a sluggish economy. A cut could also prompt Chinese banks to reduce their lending rates. That's coming up on Thursday. Also, Australia's central bank will probably keep rates unchanged on Tuesday. This is as we continue to get sticky inflation. That's the main concern. A hold is also expected in Indonesia and the UK. In Japan, of course, we already had that BOJ policy decision last week. Inflation will probably heat up, and we're going to get those numbers this week. That might give the central bank the green light it's looking for to raise rates again. That's your week ahead.
Let's bring in Louise Liu, who's a lead economist at Oxford Economics, for more insights. Louise, great to have you with us. And I might start off with the RBA. In terms of the communications, again, this is sort of one of the many central banks here that is dealing with a pretty fine balance of risks.
Yeah, indeed. I mean, I think at the start of the year, we were expecting that the RBA would actually go ahead and cut rates by the end of this year. But given that, much of that domestic demand pool has been coming from the fiscal side. So we've had a pretty stimulatory budget at the start of the year in May. So that actually allows us to reassess our assessment and really think that perhaps the RBA might actually cut rates much later than we previously thought. Obviously, inflation, what the budget does to inflation as well as for the outlook of interest rates is still to be seen. But we are expecting that inflation will stay quite sticky, although that there will be cost of living relief measures that could offset that at the end of this year.
And of course, at the moment, we've got Chinese Premier Li Qiang on what is a landmark visit to Australia. Do you think a warming up of relations or even warmer relations, or at least the elimination of trade tensions, particularly as we get into November, where we could see further trade tensions more globally, does that help the outlook for the RBA?
I mean, it's definitely not damaging for the outlook when it comes to bilateral tensions. I think the RBA will be looking at this as more of perhaps a bit of a non-event, because I don't think it does much to really change the outlook of Australian trade or inflation or domestic inflation. The visit is interesting in that it's coming really at the back of some of the easing of tensions between the two countries in terms of the restrictions that were coming off of them after a few years. So I think there will be perhaps some cautious positivity to be taken away from that, but I don't think there's much to be read into that in terms of how RBA will be devising its macro policy trajectory going forward.
And Louise, Premier Li's visit to Australia and perhaps the easing of tensions comes at a time when China is facing its own domestic issues, right? We are expecting the PBOC to make a decision on the MLF today. Now, Bloomberg Economics has an out-of-consensus estimate that they will actually end up cutting. What do you think?
Well, we did have that view, I would say, almost just over a few weeks ago. We've since pushed out our view on a rate cut to Q3 and Q4, and I could actually see arguments for both sides. I mean, in our view, because of the slow pace of government issuances, the slow pace of stimulus to build up this year, there really isn't that much of a liquidity to mop up in the system. So there really isn't a very strong case for lowering the MLF later today. But having said that, any stimulus, any supportive measures is good for the economy, and we could well see a positive signal coming out of the PBOC later today.
We have seen significant pressure on the offshore yuan as well, headed towards that 730 level. It's been really across the board when it comes to Asian currencies, right? What are you factoring in from the U.S. economy that might perhaps lead to more pressure across Asian currencies, given the strength of the U.S. dollar at this point?
Yes, I mean, certainly we have the higher for longer thesis for a while now. The U.S. domestic demand outperformance seemed to be still relatively resilient, which lends strength to the dollar, although we are seeing some moderation in recent months. One of the other things that we're closely looking out for is how much the ongoing trade tensions with the U.S. We've talked a lot about how the tariffs are not really, they're really more buck than bite. But having said that, they do lend more strength to the dollar for longer, which really, kind of is a boat that lifts, or is a wave that lifts all boats in the region when it comes to currencies across the region. We are also seeing, one of the more structural. We've talked a lot about the cyclical factors driving up the dollar, but we're also seeing some structural improvements in the U.S. balance of payments as well, and that could imply that we could see a dollar that is much stronger than we expected for much longer.
What does that mean in terms of the impact to some of these economies, especially, say, the Japanese yen, where there doesn't seem to be necessarily a floor given the rate differentials at this point?
Yeah, I think generally Asian currencies, including the Japanese yen, have been quite. I think central banks in the region are generally quite interventionist. The strong dollar has led to some pressures across the region. We've obviously seen the BOJ intervene quite substantially over the last few months. Although they're also quite clear. BOJ officials are also quite clear that a weak yen would not necessarily be a trigger point for how they view the BOJ policy rate. But I think across the region, because central banks tend to be highly interventionist, they also do have quite healthy buffers for the most part to defend against the currency. We should see the kind of moderation that is, I suppose, a little bit more, the kind of depreciation that is a bit more moderate than the free fall that we might have seen 2 or 3 decades ago.
Louis Liu, good to have you with us, lead economist at Oxford Economics, with all the data and the rate decisions expected this week. Now, public and private sector investments in the developing world were a focus at the G7 summit after President Biden announced a $4 billion commitment from firms including Larry Fink's BlackRock. World Bank President Ajay Banga was also at the summit and told us exclusively about the need for this funding.
The real situation is that Africa is going to be 1.5 billion people going to 2. And frankly, how can you not have a continent of that type contributing to future economic growth? That's the other way of looking at why Africa. And so what I'm trying to talk about there is what creates jobs for those young people. It's got a demographic dividend coming through it. But if you don't give them clean air, clean water, healthcare and education when they're growing up, and jobs when they're older, you have a problem with that demographic dividend becoming a liability. Can't do that only with government money and multilateral money. That's why people like what Larry did yesterday or Satya was talking about. These are all the ways to get private sector money as well to come in at scale to help create the jobs in that continent.
How difficult are these conversations on the sideline of the G7 when you see leaders here coming up wounded by recent elections, battered, because what their electorate is focused on is rising prices at home and immigration coming into their country. And meanwhile, you have leaders talking about investments in other parts of the world and also what's going on, of course, with the war in Ukraine. Yeah, but remember, if you're discussing private sector investing, this is actually good for these leaders because it's a way to enhance every dollar that governments and multilateral institutions put in to add a little more. And that's very, very helpful to them. So it just depends how you approach this discussion. My way of approaching it is it's not all about the money you give one-on-one bilaterally. It's about the leverage you get. So, for example, if you give the World Bank money into what we call IDA, which is the institution that provides grants and concessional financing to the poorer countries, a lot of which are currently in Africa, unfortunately, that gets a leverage. Every dollar you give me as a country, as capital, I can make it 4 times. So leaders know that too. And then if you bring in the private sector, that 4 can become 8 and 10. So people are thinking about how to get a dollar to go to 10, not just a dollar for a dollar. And I think that makes for a good conversation. But is multilateralism harder, which I know you're a big believer in, when you see the rise of nationalism? Oh, yeah, sure. Listen, I've been saying for years when I was in my old job in the private sector that one of the biggest things that worries me is chauvinistic nationalism, because it tends to create the absence of connectivity. But I think if you look at the last few months itself, we've managed to get capital and hybrid capital and portfolio guarantees into our institution, and we are the one that's working with this multilateralism. So let me give you an example. People keep asking me about the debt crisis in Africa.
right? And if you think about the 4 countries from Africa that entered the G20 common framework, Zambia, Chad, Ethiopia, and Ghana, from the time they entered, we in the bank have given them $16 billion of money. Nobody else has given them money. Of that 16, 8 was concessional and 8 was pure grants. Of that 16, 9 was net positive. So that's all multilateralism at work. People just talk about one part of it, but multilateralism does work with the leverage that institutions like the bank provide.
We, of course, have a U.S. election coming up. And part of what you've wanted to expand in your approach at the World Bank is not just poverty, but also climate. Do you think that would be at risk if we were to see a Trump presidency?
Not really. I just remember that during his prior presidency, he was one of those who actually gave the capital increase to the World Bank. He sees the value of this leverage and the value of this kind of institution.
That was the World Bank President Ajay Banga there speaking exclusively with our colleague Anne-Marie Hordern. More ahead on the Asia trade, this is Bloomberg. The latest corporate headlines on the Financial Times is Adidas is launching an internal investigation into allegations of bribery at its China business. It comes after a whistleblower complaint accusing staff of receiving kickbacks from external service providers. The whistleblower also claimed that a second senior manager received millions in cash, as well as physical items such as real estate. Hyundai Motors' Indian unit has filed for an IPO that is expected to be one of the nation's largest. The car maker will offer 17.5%, or some 142 million shares of Hyundai Motor India. The unit is not selling any new shares, and the entire proceeds will go to the parent firm. Bloomberg earlier reported that Hyundai was seeking to raise about $2.5 billion. Meta will delay the launch of its AI chatbot in Europe indefinitely after regulatory pushback. The tech firm had initially planned to train its large language models using public posts generated by European users. Meta says the decision is a step backwards for European innovation and AI development. A spokesperson confirmed Meta still plans to bring these products to Europe, but declined to share a timeline, Shery.
Heidi, marginal moves across currency markets right now. Of course, it's early in the Asian session on this Monday morning. We have seen the dollar pretty supported for the past 4 weeks, given the more hawkish commentary coming from the FOMC, despite that slowdown in inflation and jobs numbers. So take a look right now at the Japanese yen, which at one point last week got past that 158 level. Of course, we didn't get that much in terms of details coming from the Bank of Japan on those debt purchase reductions. The offshore yuan also holding steady at that 727 level, but we do have that rate decision coming from the PBOC later today. An out of consensus call by the bank, by Bloomberg Economics, is that the PBOC will in fact cut its one-year medium-term lending facility rate. But of course, we're watching activity data as well, perhaps showing some sluggishness. And the political risk across Europe being felt in the euro as well, which is really trading at around those April lows. We're watching French stocks, which lost about $200 billion in value last week. This is Bloomberg. This is the Asia trade. We're about 30 minutes away from the major market opens. Here are the top stories that you should know this morning. Chinese Premier Li Qiang is in Canberra to meet with Prime Minister Anthony Albanese as he continues a visit to Australia that's cementing improved ties. The Labour government says it will raise all points of difference with Beijing, including tensions over Taiwan. We're watching European assets as markets reprice the risks of the political drama in France. Marine Le Pen's far-right party is maintaining its lead against President Macron's in the latest polling. Meanwhile, in the UK, a new survey suggests Rishi Sunak's Conservatives are headed for an election wipeout. Investors are looking to China's data dump on Monday to potentially counteract some of the gloom spread across markets by the political turmoil in France and signs of potential weakness in the U.S. economy. U.S. consumer sentiment unexpectedly fell to a 7-month low in early June. Minneapolis Fed President Neil Kashkari says the central bank is in a good position to take its time and watch incoming data before starting to cut rates. And this is a setup across Asian markets right now. Of course, we're also watching the RBA policy decision later this week. We're seeing downside of 0.2%. When it comes to Nikkei futures, downside of 0.9% after we saw those gains in the previous session. The Japanese yen holding at that 157 level after topping 158. Weakness renewed after the BOJ did not really provide any details when it comes to reductions of bond purchases. U.S. futures unchanged. But markets really have been rattled by that key gauge of U.S. inflation expectations, unexpectedly jumping to the highest in 30 years. And Cleveland Fed President Loretta Mester telling us she also sees risks from price pressures tilted to the upside.
The median projection in the S&P is pretty close to my own projection for the economy. We've made pretty good progress on inflation over the last 2 years. It's still too high. The most recent data that we received, in fact, we got the CPI report on the second day of the meeting, and it was a great gift for my last FOMC meeting to get that report, the good news there. But it still means that there's work to do on inflation to gain confidence that it is on that downward trajectory to 2%. And you know, the unemployment rate has ticked up a little bit over the last couple of months. Certainly, though, if you look overall, the labor market conditions remain healthy, and that's a great thing, too. So I think monetary policy right now is well positioned, really, to ensure that inflation does move back down towards 2% over time, and that labor market conditions remain healthy. And that's a good position to be in. And if you look at the SCPs overall, what you see is the modal path of the S&P across participants is that rates will be coming down. The dot plot shows that there was weight on 1, 0, 2, but it'll really depend on how the economy actually evolves. And I think that's going to be the work of the committee going forward, assess incoming information about the economy. Does it change your outlook? Is it consistent with the modal outlook? And as inflation comes down and as inflation expectations, short run, the year ahead, comes down, then it'll be appropriate to reduce that Fed funds rate and remove some of the restrictiveness.
Well, further confidence that you're moving towards the 2% target is almost a cliche now. What does that actually mean? Does it mean you need to see the various inflation indicators keep coming down, even if it's only, say, 1/10? Do you have a level of the year-over-year rate of inflation that you want to hit? How can people judge what the Fed is going to do, what they're thinking about?
So what my view would be is I'd like to see a few more months of inflation reports that are positive in the sense of similar to what we got last month. I'd like to see that continue.
The Cleveland Fed President Loretta Mester there speaking to Bloomberg's Mike McKee. Taking a look at some of the stories we're following across geopolitics, and the Israeli military is beginning a daily 11-hour tactical pause along a route in southern Gaza to increase humanitarian aid. The army says the pause is in effect until further notice and is being coordinated with UN and international aid agencies. The pause comes weeks after the World Court ordered Israel to immediately halt its military assault on the southern Gaza city of Rafah. The Ukrainian president's bid for Global South support has faltered at a 2-day summit in Switzerland. Volodymyr Zelensky was trying to broaden backing for Kyiv as it battles Russia's invasion. India, Indonesia and Saudi Arabia were among nations that did not sign on to a final statement drawn up at the meeting. China also avoided the event, while Brazil only sent an observer. The Stockholm International Peace Research Institute says the number of nuclear warheads deployed with missiles and aircraft set to increase over the next few years. The new report estimates that that number rose to just almost 4,000 this year. Most of the arsenal belongs either to Russia or the US, but the institute believes China has also placed the warheads on high operation alert. South Korea, meanwhile, says any sharing of nuclear technology is its red line for cooperation between the North and Russia. President Vladimir Putin is set to make his first trip to North Korea in 24 years this week. South Korea's defense minister, Shim Won-sik, spoke exclusively to Bloomberg in Seoul about what he thinks Putin will get from Pyongyang.
푸틴이 원하는 건 포탄이겠죠. 미사일하고.
What Putin wants would be artillery shells and missiles. Putin is expected to seek closer security cooperation with North Korea, especially military supplies, such as artillery shells that are necessary to seize a chance to win.
물품에 대해서 북한에게 요청하리라고 봅니다.
In terms of the satellite, we saw North Korea's last satellite launch fail, and that's despite Russia's pledge for cooperation, space cooperation. So what's your take on that?
그게 바로 러시아의 엔진 최신의
They are exactly Russia's latest engine technologies. So our assessment is that North Korea has admitted to receiving engine technologies from Russia. In terms of why they failed, they have yet to secure reliability as they integrate North Korean engines and other technologies that they have developed with Russian technologies. North Korea is believed to be continuing engine tests at the moment, and we believe that they will try another launch in the second half.
할 것으로 시험 발사가 아닌 발사를 할 것으로 저희들이 생각하고 있습니다.
How much North Korea is spending on launching these missiles from short range to intermediate range and ICBM? Do you have a breakdown?
Rather than speaking of the cost of individual missiles, let me give you an overall figure. North Korea fired around 30 missiles last year. According to a thorough estimate from the Korean Institute for Defense Analysis, known as KEDA, we would need some $1 billion in spending. The money is enough to cover North Korea's food shortages for a year. So in fact, North Korea is ignoring its people's hardships to carry out missile provocations.
So, Minister, Russia helping North Korea's military technology, that inevitably means greater threat for South Korea. So what is your red line in terms of Moscow's military cooperation with North Korea?
아까 말씀한
We consider the transfer of key technologies related to nuclear and missile programs as the red line, but it's something that needs to be decided together by South Korea and the US. There's no point in the South Korean government setting it alone. So we are having discussions to decide with the US and share with like-minded countries.
We're hearing that there could be another three-way summit between South Korea, US, and Japan. So in terms of the security cooperation, what is the priority for South Korea?
우선 북핵 미사일 위협에 대응하는 데 있어서
A priority would be to establish a system to more effectively, promptly, and coherently respond to North Korea's nuclear and missile threats among South Korea, the US, and Japan, and to make that irreversible. So during the last Shangri-La dialogue, we have decided to create a security cooperation framework amongst the three of us. South Korea has drafted a document and proposed to the US and Japan. The defense ministers of the three countries will sign it in the second half of this year.
한미일 국방부장에 서명하기로 했습니다.
Minister, China has accused the US of trying to build what it calls an Asian version of NATO. So what are your thoughts on that?
중국이
On China's concerns, I think it really depends on China's behavior. If all the countries in the Indo-Pacific, not just China, adhere to the rules-based world order, the rest of the world will not try to limit it. So the idea of an Asian version of NATO to me seems like a premature concern. But at the same time, I believe that the best way to dispel such concern is for China to give the Indo-Pacific region and the international community confidence that it will uphold the rules-based international order, and there should be no problem.
지킨다고 하는 확실한 믿음과 신뢰를 인태 지역 나아가서 국제사회에 준다면 아무 문제가 없다고 생각합니다.
So South Korean Defense Minister Shim Mon-sik there speaking with Bloomberg's Soo Hyung-choi. And of course, we continue to monitor the Chinese Premier Li Qiang's 4-day visit to Australia. This is really considered quite a landmark visit. This is the first visit to Australia by a senior Beijing leader since 2017, on the back of what has really been seen as improving ties and a warming relationship between the two trading partners. There you have Premier Li Qiang there shaking hands and meeting PM Albanese there in Canberra ahead of that bilateral meeting. We've already seen some deliverables. The Premier visiting Adelaide, of course, over the weekend, a winery and the zoo, amongst other places, but promising that panda diplomacy will continue. Of course, there have been two pandas, Wang and Fu-Ni, who have been there for 15 years. Unfortunately, they haven't been able to have baby pandas, but they will be replaced by two new pandas as soon as possible. So this was the first leg of his trip. He's now, of course, in Canberra, and we'll see him see these meetings with Prime Minister Anthony Albanese on Monday. From here, they'll be heading to, of course, Western Australia, the mining powerhouse region. In Perth, he's expected to visit a critical minerals project with links to Chinese business, which, of course, has been a source of contention in terms of Chinese investments and interest in strategic minerals that are based in Australia. You're seeing there Prime Minister Anthony Albanese amiably chatting with the Chinese Premier Li Qiang. We have seen this warming of relations, and a lot of that has been translated through to the dropping of some tariffs on key trade, namely, of course, wine has been one that has seen some respite. There are still a couple of areas that are where trade strikes are being held up, so we'll wait to see if the remaining trade tariffs will be dropped by the end of this. But of course, despite the sort of positivity of this tour, we do still look at the underlying tensions and disagreements between these two nations. Australia's increasingly important role in the emerging US-led security architecture across the Indo-Pacific. Beijing, of course, looking to really seek dominance across that area and in the South China Sea as well. We've had near misses between the country's military and, as I mentioned earlier, Canberra's ongoing reluctance to let Beijing invest in key industries, including strategic minerals. But it is a very warm welcome in a very cold Canberra at the moment. You're seeing Chinese Premier Li Qiang, the first senior Chinese official to visit Australia, I should say, since 2017. They're being welcomed in that official ceremony in Canberra, Shery.
Yeah, but you said it right. It's a very significant visit. We're talking about Li's predecessor, Li Keqiang, having last toured in March 2017. So the number 2 official of China visiting Australia for the first time in 7 years. And as you mentioned, some of those frictions between the two countries, of course, we have had some near misses when it comes to the two countries' militaries, but of course, trade concerns as well as investments by China in key industries, which is contentious still when it comes to Australia letting China invest. You can see their Premier Li Qiang at a ceremony in Canberra, a ceremonial welcome for the Premier at Parliament. Right, let's turn to South Korea because the country is saying it's planning to raise as much as $1.3 billion in a bond sale. The move is meant to set a stable reference rate for local companies. For more, let's bring in our Asia credit editor, Finbar Flynn. And Finbar, we know that Korea last sold these bonds back in 2021, so why do it now?
Good morning. Yes, they're very conscious of the timing, and we know they've been looking to sell a bond for quite a while. But they have a bit of a tailwind now because yields have come down quite a lot in the last week, and spreads in Asia have been at record levels for a high-grade investor or high-grade issuer. So it's pretty good timing to come to the market.
So is there anything different about this sale?
So this sale is actually quite interesting because the government is actually planning or aiming to sell these bonds to other governments, central banks, supranational agencies, because, as you said at the start, Shery, they want basically to set a reference point. So they want to keep the levels fairly stable because we're seeing an awful lot of issuance from South Korea by South Korean companies, and they're trying to actually make that an easier job.
What is sort of the environment and volumes in general looking like when it comes to dollar bond sales in Asia so far this year?
So I mentioned there that South Korean companies have been issuing a lot, and they've actually been giving a great boost to the market because we're seeing more issuance in the last couple of months. And the market had been at a bit of a low ebb because a lot of Chinese companies, given their difficulties with the housing meltdown, they had stopped coming to market. So the market is reviving from a bit of a low ebb. So it's a good time for the sovereign to come. Our
Asia credit editor Finbar Flynn there. We do have more ahead on the Asia trade. In the meantime, let's take you back to Canberra as the ceremonial welcome for the Chinese Premier Li Qiang continues on a very cold morning in the nation's capital. The inspection of the Australian military. We just heard the military band playing the national anthem of the People's Republic of China. This is the first visit to Australia by a senior Beijing leader since 2017 and really has been the culmination of these warming ties between Beijing and Canberra at a time of course, escalating trade, security tensions across the Asia Pacific. More ahead on the Asia trade. This is Bloomberg.
You're watching the Asia trade. We're just a few minutes away from the start of trading across Asia. Of course, we'll be watching JGBs because we saw the biggest advance since late December after the BOJ policy decision. But staying in Japan, Microsoft says that it sees the country as one of the biggest, fastest moving to embrace new artificial intelligence tools. So I spoke exclusively with the company's Japan president, Miki Tsuzaka, about progress in the AI push and the tech giant's plans for a $2.9 billion investment.
So the plan is a four-part plan. So the $2.9 billion investment in the data centers. There's also a reskilling plan of 3 million citizens of Japan. I'm particularly interested in the upskilling of women. We need more women in tech. We need more females in the development world and engineering world. So I'm very excited that we'll be doing that over 3 years with various partners in the ecosystem. I'm also very excited about the fact that we will now open a Microsoft Research Center, first of its kind, to do pure research. And I am really excited that they will focus on the biggest problems of Japan, like aging. We are a leading country in terms of how fast we're aging, and I would love our researchers to come up, you know, using the power of AI to help aged lives be better in the future. So I'm very excited. And the fourth one, is cybersecurity. You can't use AI without security. It's security, 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 and then you get to use AI. So we are working with the government to make sure we use AI responsibly, securely, and safely.
Tell us a little bit about that collaboration with the government when it comes to security, privacy, and just everything that goes around artificial intelligence that's currently causing a lot of concern as well.
We work hand in hand with the government at the national level and at the local level and at the community level. We have a fantastic public sector team that leads that with our legal team. We also work with companies because I don't think we can just depend on governments to keep us safe and secure. So it really is a business, public-private, partnership to make sure that that happens.
When it comes to the Japanese economy, it's really always been a concern about demographics, about productivity. How will new technologies, especially artificial intelligence, help with this?
The best number I've seen from the government is that generative AI is supposed to grow our economy by 6 points in 2025. You don't see many other drivers of that kind of growth in our economy. So I'm very excited. I think the possibilities are, frankly, limitless, and this is an opportunity for all of us in Japan and worldwide to use the best of the technology to apply it to growth.
But what's interesting when we heard these news from Microsoft about Japan's investment is that utilities and industrial stocks jumped. And that's because when it comes to infrastructure for artificial intelligence, it really takes a lot of energy, right? In a resource-poor country like Japan, what impact could this have?
So we have made a commitment in our data centers around the world to be net zero in the next few years. So everything we do is based on clean energy. And frankly, AI strategy is energy strategy. In a country like ours, to keep growing, we need that. So we will work with local players. We'll look at international players as well to make sure we invest responsibly to run a clean shop.
Your partner OpenAI is also expanding here in Japan, isn't it? Do you have any collaborations with them here locally as well?
So we are a large investor. I respect a lot of what they do. They run on Azure, our cloud service. But we might work together. We might also work separately. And that's the way we see the market evolving. And we will see a lot more players. We're often asked, we're doing so well now, I think it's Microsoft, we're going to conquer the world. And I think the answer is no. There's so much opportunity here for many, many players, and competition is always good for the end consumer.
Microsoft Japan President Miki Susaka there. And we have breaking news out of Japan. We are getting the core machine orders. Now, month on month, there's a contraction of 2.9% after 2 months of growth. It's still a smaller contraction than was expected by the survey for the month of April, and year-on-year is growth of 0.7% instead of a contraction that was expected by economists. Of course, core machine orders gives you an indication of future capital spending by companies, so we're watching this number very closely. Month on month, a contraction of 2.9%. You can catch Japan Ahead every week. That's every Monday at 8:40 a.m. if you're watching in Tokyo, 7:40 p.m. Sunday in New York. Bloomberg subscribers can watch us live on the terminal using the TV Go function. This is Bloomberg.
We are continuing to follow Premier Li Qiang's visit to Australia. This is the first visit by a senior Chinese official to Australia since 2017. He's in Canberra today, of course, to meet with Prime Minister Anthony Albanese. We saw earlier the ceremonial welcoming, as well as the signing of the guest book and some of those other ceremonial aspects. So the Prime Minister, though, is expected to say that the differences between the two countries will not be resolved if they're left to fester in silence. The market opens in Sydney, Seoul and Tokyo next. We're looking like quite a bit of caution into that open. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens. Really a lot to digest this week, Heidi, because we had the big central bank decisions out of the way with the BOJ on Friday, but we're still expecting decisions from the BOE, not to mention the PBOC today as well, and of course geopolitics center stage.
That's right, and the RBA in the mix there as well, and some China data to kind of mix things up as well. But as you say, Shery, we've seen this sort of global sentiment souring as we watch markets come online for the week here in Asia, right? And a lot of the political chaos that we see in Europe at the moment also has to do with that.
Not surprising, we saw the dollar being lifted. Now, 4 consecutive weeks of gains for the greenback. And on the other side of that trade, we have seen significant pressure on Asian currencies, not to mention the Japanese yen, of course, that at one point surpassed that 158 level, especially with the BOJ providing little details when it comes to the debt purchase reductions. The Nikkei now coming online downside of 1% after gains in the previous session. We're watching JGBs as well because we saw that rally after the BOJ decision by the most since late December, and we're headed towards that 0.9% level as well. Take a look at how the Kospi is coming online because we're watching this week a potential strike by the biggest medical association in South Korea. Doctors don't want some of those government plans to reform the medical system. The Kospi is down 0.2% as we're seeing some weakness on the Korean won headed towards that 1400 level, Heidi.
Yeah, take a look at the setup as we get into that staggered open here in Australia. And geopolitics and trade front and centre, of course, we're well into that 4-day visit by the Chinese Premier Li Qiang. He was in Adelaide over the weekend. It was all about panda diplomacy, but we saw earlier he's arrived in Canberra for these more serious talks now with the Prime Minister Anthony Albanese, who is expected to basically say that further engagement is beneficial and that the differences between the two nations won't improve if they're left to fester in silence. We're continuing to watch out for that, but it is a bit of a down day as we get into the start of trading. The ASX looking pretty flat at the moment there. The Aussie dollar 66.13 as we see that flock towards haven. And of course, there's a bit of a China proxy there, and we've got a lot of data coming through as well as that PBOC decision. Watching treasuries as well. It's interesting because for bond traders, it does really look like they're looking at the numbers, the data, the soft inflation data, for example, last week, really bolstering rate cut bets. Not so much listening to, Shery, what the Fed is saying.
Our next guest sees opportunities also in China and thinks investors are missing how the country will change in the next 2 years. Harold van der Linde is head of Asia Equity Strategy at HSBC and joins us now from Hong Kong. Harold, great to have you with us. Actually, China is one of your top calls, right? Why?
Yeah, exactly. I mean, it's been the top call since the beginning of this year because we felt that there is some kind of rebalancing in funds taking place. People were too underweight, too cautious on China. Growth was probably going to be a little bit better than expected. And we've seen that play out to a certain extent. And China performed well in the beginning of the year on the back of that. But actually, if you look at the earnings growth that comes through for the remainder of the year, it's not too bad. There are risks to it. But it's not too bad. I think the positioning can actually continue a little bit further as well. So that would, provide a little bit of support, I think, for Chinese equities, at least in the very near term.
How much of your calculation has to do with policy support coming from the central bank? Because we have an out-of-consensus call from Bloomberg Economics that they will actually cut the medium-term lending facility today. We haven't seen really major action from the PBOC as of yet. Will this make a difference for how you think of Chinese assets?
I do. When it comes to the exact timing, let's see what's going to happen. Maybe you guys are going to be right today, but ultimately the problem in China is that we have too much supply and too little demand. So there's oversupply in nearly everything in China. And that means that prices are coming down. That means that you have not an inflationary, but a near deflationary sort of environment. And interest rates, therefore, will have to come down in order to deal with that and try to fire up some of that demand in the Chinese economy. So I think the trajectory is going to be of lower rates over the course of the next 1-2 years even, or something like that. How they're going to fine-tune that this week, well, we'll have to find out, right? If they're going to do something in the very near term and cut rates already. But ultimately, those interest rates, I think, you guys are right, they need to come lower.
Where do you reposition in China?
Now, this is, I think, the interesting thing. We've spoken so far about the funds have repositioned and the interest rates are coming lower. But I think we also see signs that China is starting to change under the stress that is imposed on it. So a lot of companies struggle to get access to credit. As I mentioned, there's oversupply everywhere. So their margins are very thin, if anything positive. For a lot of companies, probably negative. And I think we're going to see a lot of consolidation taking place in a lot of these industries across China. I was told, I haven't seen the numbers yet, but that quite a few of the private sector electric vehicle makers have already closed shop. We've seen already capacity being taken out of real estate. And maybe a good analogy to make is looking at the shipping sector. From 2008, 9 to until 2019, the shipping sector had oversupplied, was a really bad sector. They struggled with any money. And now, when we need the shippers, demand is a little bit stronger. We can't even get enough ships because we've destroyed, or we haven't really built up the whole supply chain of ships in terms of ship, but also shipyards and shipbuilding and these sort of things. This might also happen in China, that over due time you actually see a lot of consolidation industries. And I think increasingly as we go into the latter part of this year and next year, we should be trying to focus on those sectors where the consolidation is starting to take place. And that could be consumer, that could be selected industrials already. Construction, for example, construction equipment is something where we see this. Property, we see this happening as well, although probably it's very early stage and needs quite some time to work itself out. So that's the way I think increasingly we need to think about sector selection in China.
Yeah, it's interesting with a bunch of the sort of newest EM ETFs that have been launched, we've seen a deliberate exclusion of China. So clearly a lot of other people are still very reluctant. But across other EMs, your other top picks are Indonesia and India. So tell us about the opportunities that you see there, particularly for India. Post-election, valuations are still pretty pricey.
Yeah, let's start off with India. You're absolutely right. India is pretty pricey. It is the most expensive market in the region, and also for good reason. India has got this kind of confluence of all sorts of growth factors that are coming together that are not easily going to be set aside even if they put the wrong policies in place, which I probably think they're not going to do anyway. But you've got FDI coming in, you've got a consumer market developing that could broaden out, by the way. So that's something they could focus on, welfare transfers towards maybe the rural incomes in India. But the consumer markets are developing. You've got a formalized retail gaining market share over informal retail. So there's a lot of interesting sort of drivers in India that makes that visibility of growth, which we don't really have in China, but in India, really, really good. I feel confident to say that in India, on average, earnings growth for the corporate sector there is going to be something between 15 to 20% over the next 3 years. And that's probably checking out because in the first quarter this year, they were running at 30%. So you get good, high, visible growth. Lot of profitability. The Indian companies belong to the most profitable companies on the planet. So these valuations, yeah, they're going to be high. And what you see is that if that market sells off for whatever reason it may be, we had something pre-election, for example, you see that foreign mutual long-only funds, they come in easily, they come in very quickly. They think the valuations are high, but if those valuations come off a bit, you see them actually emerging as buyers. And of course, you have the local buyers in that market as well, which is a force to reckon with. So there are a lot of things moving in the right direction for India. We like that market.
There has been a lot of optimism about the Japanese market as well. But if we see the Fed continuing to hold and not cutting rates until later in the year, and I think you're only pricing in one cut instead of the market consensus of two, will that make a difference?
Yeah, we're seeing a September rate cut in the US coming up, and that is going to be the main driver between the divergence between Japan and the US. But arguably, that interest rate divergence hasn't really been a key driver of the yen as of late. That will eventually come back again. And we actually think that probably means that in the second half of the year, you're going to see a little bit of strength in the yen. And that might take a bit of a fizz out of the equity market in Japan. And I think we've seen very early signs of this over the last couple of months or so, where the Japanese market hasn't performed as much as one would expect with the yen being so weak. And that would be quite interesting because if that money would come out of Japan, where then does it go in the rest of the region, right? And then it's really the stories in Korea, China, and India, how they stand up if they are attractive enough to get money from Japan into their markets.
Harold, always great to chat with you. Harold van der Linde, who's a head of Asia Equity Strategy at HSBC. Take a look at one of the movers that we're following today, Hyundai Motors. This is the move that we're seeing just about 10 minutes or so into the start of trading, a pop of just short of 6% at this point. We are seeing that positive move there after the Indian unit filed for the IPO, expected to be one of the nation's largest. 17.5% or just over 142 million shares of Hyundai Motor India will be offered, according to a draft red herring prospectus. That unit isn't selling any new shares in the IPO. The entire proceeds will go to the parent firm. Hence, we're seeing that positive reaction for Hyundai Motors. The company is seeking to raise about $2.5 billion in the IPO with a potential listing plan by the end of this year. That's according to reporting that we had done previously. That would make it one of the biggest on record in India, to rival that of Life Insurance Corp of India, and that was a $2.5 billion offering back in 2022. The valuation there would be around $25 billion. More ahead on the Asia trade, this is Bloomberg. Well, Chinese Premier Li Qiang is meeting with Australian Prime Minister Anthony Albanese in Canberra on Monday, as the world's second largest economy seeks warmer ties. Bloomberg's Paul Allen joins us live from the Australian capital. And Paul, we saw the sort of ceremonial welcome. What happens now?
Yes, the crowd behind me here got very excited when Li Qiang arrived as well. So that meeting between Li Qiang and the Prime Minister Anthony Albanese taking place at the moment. And in about 90 minutes' time, we anticipate we're going to get some joint remarks from the pair as well. Now, in advance of this meeting, we did hear Premier Li saying that relations with Australia are, quote, back on track. The Prime Minister Anthony Albanese will say in a speech later on as well that consistent, steady engagement is going to help build and maintain stability in the region also, and that the issues between the two countries can't be allowed to fester in silence. So better to have dialogue, and dialogue is exactly what we're having at the moment. From there, the Premier will go on to meet the Governor-General. There will be a lunch, and then he'll also meet the Leader of the Opposition, Peter Dutton. And that meeting's taken on at a poignancy today because Peter Dutton, according to a Resolve poll, has just overtaken Anthony Albanese as preferred Prime Minister. And it was, of course, underneath a government which contained Peter Dutton that relations between China and Australia sank to a low. So that should be an interesting meeting later on this afternoon.
So what sort of deliverables could we see, given that we are expecting to continue to see these friction points between the two sides?
Yeah, there are definitely still some friction points. There is still, in fact, one trade strike remaining against Australia from China, and that is on the export of live lobsters. Now, it would be logical, I guess, to see that trade strike lifted during this visit. It would be a bit weird to leave that one in place when all of the others on barley, on wine, on coal, on lumber, all of those have gone. We still have one remaining in place. But as you say, that's not the only point of tension, despite all the kind words that have been said in the early stages of this visit. It was not that long ago that Chinese investors in Northern Minerals, which is a critical earths miner here in Australia, were told to divest. China obviously very interested in continuing to invest in Australia, but China's foreign direct investment, according to the Australia-China Business Council, only about 2%, about $85 billion. That is dwarfed by the investment in Australia by, for example, the United States, more than $1 trillion, accounting for about a quarter of Australian foreign direct investment. So still some tension to resolve on that front. And Anthony Albanese says he'll also be raising other issues, such as recent clashes between the two militaries and also the fate of writer Yang Hongjian, who remains in China detained with a suspended death sentence. So, yes, plenty of sticking points left to discuss as well.
Yeah, from those sticking points to perhaps a little bit more levity, and we've already seen Beijing flexing their soft power over the weekend, perhaps literally.
Yeah, absolutely. Australia to receive two new pandas. The pandas are Wang Wang and Fu Ni. They're heading back to China, and we will receive two new pandas here. I mean, it seems like a bit of fun, cuddly animals, but it is, again, deeply symbolic. China is long engaged in what's known as panda diplomacy. If you receive a pair of pandas from China, that means the relationship is warm, things are progressing well. And we've come such a long way, haven't we? It was just in 2021 that China was issuing that list of 14 grievances, 14 demands that it wanted Australia to meet. Those have all gone now. Premier Li also visited a winery in Adelaide during that visit where he mentioned the two pandas. It was only at the start of this year that the trade strikes on wine were removed. So this relationship has warmed very rapidly, and the imminent arrival of two new pandas are very symbolic of that.
Hi, Bloomberg's Paul Allen there joining us from Canberra with the latest on that visit. We'll have more on Chinese Premier Li Qiang's visit there with the University of New South Wales Associate Professor Feng-Shi Wu to discuss expectations for the trip later this hour as well. In the meantime, let's talk a little bit about political risk across Europe, because European futures are trading like this after we saw that downside in the Stocks Europe 600 stocks last week, not to mention France's CAC 40, which extended losses to the most since March 2022. We're talking about French stocks losing more than $200 billion in value last week. And some of the big losers were those banks across Europe as we continue to watch that growing political risk with the French elections. And given what's happening on that front, we have seen really 10-year French bond yields seeing this huge jump on a weekly basis over safer German bonds, the most on record. We continue to get these concerns that Marine Le Pen's far-right National Rally Party will bring in looser fiscal policies if it wins the upcoming election. So you can see right there that the French spread over Germany has surged. Heidi.
Some of the other geopolitical developments that we're following today, Shery, the Israeli military is beginning a daily 11-hour tactical pause along a route in southern Gaza to increase humanitarian aid. The army says the pause is in effect until further notice and is being coordinated with UN and international aid agencies. The pause comes weeks after the World Court ordered Israel to immediately halt its military assault on the southern Gaza city of Rafah. The Ukrainian president's bid for Global South support has faltered at a two-day summit in Switzerland. Volodymyr Zelensky was trying to broaden backing for Kyiv as it battles Russia's invasion. India, Indonesia and Saudi Arabia were among the nations that did not sign on to a final statement drawn up at the meeting. China also avoided the event, while Brazil only sent an observer. The Stockholm International Peace Research Institute says the number of nuclear warheads deployed with missiles and aircraft is set to increase over the next few years. The new reports suggest that the number rose to nearly 4,000 this year. Most of the arsenal belongs to either Russia or the US, but the institute believes China has also placed some warheads on high operation alert. The US, South Korea and Japan will sign a deal this year to formalize their security partnership against threats from North Korea, cementing ties before America inaugurates its next president in January. Speaking exclusively with Bloomberg, South Korea's defense minister Shin Won-sik says he and his counterparts will sign a deal in the second half of the year.
우선 북핵 미사일 위협에 대응하는 데 있어서
A priority would be to establish a system to more effectively, promptly, and coherently respond to North Korea's nuclear and missile threats among South Korea, the US, and Japan, and to make that irreversible. So during the last Shangri-La dialogue, we have decided to create a security cooperation framework amongst the three of us.
More ahead on the Asia trade, this is Bloomberg.
We're in a very good position right now to take our time, get more inflation data, get more data on the economy, on the labor market, before we have to make any decisions. So we're in a strong position. But if you just said there's going to be one cut, which is what the median indicated, that would likely be toward the end of the year.
Minneapolis Fed President Neil Kashkari there on the Fed's rate path. And markets have also been rattled by a key gauge of U.S. inflation expectations, the average number unexpectedly jumping to the highest in 30 years. And Cleveland Fed President Loretta Mester telling us that she also still sees risks from price pressures tilted to the upside.
The median projection in the S&P is pretty close to my own projection for the economy. We've made pretty good progress on inflation over the last 2 years. It's still too high. The most recent data that we received, in fact, we got the CPI report on the second day of the meeting, and it was a great gift for my last FOMC meeting to get that report, the good news there. But it still means that there's work to do on inflation to gain confidence that it is on that downward trajectory to 2%. And you know, the unemployment rate has ticked up a little bit over the last couple of months. Certainly, though, if you look overall, the labor market conditions remain healthy, and that's a great thing, too. So I think monetary policy right now is well positioned, really, to ensure that inflation does move back down towards 2% over time, and that labor market conditions remain healthy. And that's a good position to be in. And if you look at the SCPs overall, what you see is the modal path of the S&P across participants is that rates will be coming down. The dot plot shows that there was weight on 102, but it'll really depend on how the economy actually evolves. And I think that's going to be the work of the committee going forward, assess incoming information about the economy. Does it change your outlook? Is it consistent with the modal outlook? And as inflation comes down and as inflation expectations, short run, a year ahead, comes down, then it'll be appropriate to reduce that Fed funds rate and remove some of the restrictiveness.
Well, further confidence that you're moving towards the 2% target is almost a cliche now. What does that actually mean? Does it mean you need to see the various inflation indicators keep coming down, even if it's only, say, a tenth? Do you have a level of the year-over-year rate of inflation that you want to hit? How can people judge what the Fed is going to do, what they're thinking about?
So what my view would be is I'd like to see a few more months of inflation reports that are positive in the sense of similar to what we got last month. I'd like to see that continue.
That was a Cleveland Fed President Loretta Mester there speaking to Bloomberg's Mike Mickey. Take a look at how US Treasuries are trading. What's really been interesting is the fact that clearly bond traders as well as equity traders continue to doubt the narrative that we've pretty consistently heard from the Fed of being data dependent. Well, to that end, they have really been looking at the data that we've gotten, particularly when it comes to the inflation data and inflation expectations, right? It's a pretty steady picture across the 10 years when you take a look at US Treasuries at the moment. We've seen, of course, going into the end of last week, that extension of that weekly curve flattening rally there. A lot of the geopolitical sort of tensions that we've seen across Europe has also resulted into some loading of haven assets, Shery, including US assets in the US dollar.
Yeah, not surprising. We are seeing JGBs continue to gain ground after posting the biggest gain since late December, and the Japanese yen holding steady at that 157 level. But when it comes to the stock markets, take a look at that sea of red on the Nikkei right now, being led lower by real estate, energy, and consumer discretionary stocks. Tech stocks are also down that sector about 2%. But energy, of course, not surprising given that we do have oil losing ground for a second consecutive session, although on a weekly basis, we did see gains, the largest since April. OPEC Plus clarifying its plan to return some output to the market and a little bit of strength when it comes to the fuel markets. But really overall, a sea of red across Asia. This as we continue to digest, of course, all of the central bank decisions. We're headed for another one from the RBA. Not expected much change on the key rate at the highest in 12 years. This is Bloomberg.
About 30 minutes into the start of trading in Asia, the top stories that you should know. Chinese Premier Li Qiang is in Canberra to meet with Prime Minister Anthony Albanese as he continues a visit to Australia that's cementing improved ties. The Labor government says it will raise all points of difference with Beijing, including tensions over Taiwan. We're also watching European assets, markets repricing the risks of the political drama in France. Marine Le Pen's far-right party is maintaining its lead against President Macron in the latest polling. Meanwhile, in the UK, a new survey suggests that Rishi Sunak's Conservatives are headed for an election wipeout. Investors are also looking to China's data dump on Monday to potentially counteract some of the gloom that's spreading across markets by the political turmoil in France, signs of potential weakness in the US economy, of course, that lack of conviction over Chinese property sector recovery and that weakness in the consumer will be front and centre in that data today. We've seen that haven demand, right? As you take a look at those gains we see week after week when it comes to the US dollar. Not a great deal of risk sentiment as we get into just about half an hour into the start of trading here in Asia. The Nikkei seeing losses of close to 2% at this point. The Kospi is pretty much trading water, as is the state of affairs when it comes to trading in Sydney here as well. The Nikkei 225, though, underperforming the region, pretty close to those session lows. And also sort of watching what we see across bond trading as well for Treasury traders. So much focus has really been less about what the Fed has been flagging, but what other data we continue to monitor as we contend with whether we will just get one rate cut, or expectations are potentially still for 2 or 3 this year. Let's get back now to Chinese Premier Li Qiang's visit to Australia. Joining us from Sydney with me here is Feng Shiwu, who is joining us from the University of New South Wales. He's the Associate Professor in Political Science and International Relations. Professor, we're really great to have you with us. So it's interesting, nothing is off the table, including sticky areas like Taiwan. We know that these two militaries have near misses. The Indo-Pacific remains to be, a contentious topic. And Prime Minister Albanese had said, these issues don't get better if they're left to fester in silence. Do you think progress will be made?
Progress has been made. Regardless of the result, he is in Canberra. Prime Minister Li is already in Canberra. Talks have started. I think it's a strong step after what has happened last year, and also after AUKUS, after 3 years of downward track of the bilateral relations. The two countries at least are meeting and talking. Also, if we look around the world, Prime Minister Li is not going to DC, is not going to London, but he's coming to Canberra. So relatively speaking, having dialogue itself has important implications for any other further outcomes. So at least the two sides are talking. So I think most of the observers are noting this point. Yes.
But more dialogue is always better than no dialogue. But there are obvious risks for Australia as a middle nation, if you will, with such a traditional allegiance to the US. We know that the US has been looking to its partners to also de-risk in supply chains, for example, with China. How difficult does that make it when it comes to the partnership between Canberra and Beijing?
Extremely difficult. I think both sides have realized it. Australia has definitely realized it. It had the boundaries of Australia's engagement with China, particularly in security, strategic, but increasingly in energy, clean energy technology, as well as critical mineral, has been set. And we are here sort of to negotiate whatever is the rest. There are a bit of wiggle rooms, and I think the Albanese government has been pragmatic, which is appreciated in a way that to negotiate as much as possible to minimize costs, particularly sunk cost in economics terms. Investments has been made, certain corporate level structures have been done, so there are a bit of economic sunk costs there. And so from the Australian side, being pragmatic is a way to negotiate as minimum cost and damage as possible and try to get some gains at the level of cooperation, at the level of business, at the level of not just large-scale business, but also medium and size of businesses. These are critical.
Yeah, and you talked a little bit about, I know you focus a lot on sort of environment and new energy, and so much of the criticism has been overcapacity on EVs, on batteries, on these new technologies. Do you think that is a politically driven criticism or a pragmatic one?
The issue itself has been highly politicized and to a great degree increasingly securitized. So it's not just a rhetoric. Critical mineral has security implications as the world is heading to more and more conflicts. These are not regional, localized, isolated conflicts. These are conflicts at the regional level, has potentially even global implications. As these things are happening, conflicts are not just becoming more frequent, becoming more strategic. So minerals are security assets. So it shouldn't be a shock to businesses that in this area where we'll see more and more regulations or more political interest being involved.
So, thank you. We have really highlighted this visit by Beijing's #2 official as very significant, given that we haven't seen this high-ranking level official visit in a few years. But I wonder what Premier Li Qiang's political influence is under President Xi Jinping, who's essentially appointed himself ruler for life.
Thank you. I think it's a very good question. There are two sides to it. So you probably have noted that this is only into the second year of his premiership. So he's a new prime minister. He's the only prime minister in the past 50 years who has never been a deputy prime minister. Right? So his primary focus has always been regional, provincial level economic development. And as prime minister, he will be judged at the end of his term by the national sort of economic performances. So he is under pressure to continue China's economic development. So he probably has some personal stake in the visit to increase his international portfolio, as well as his international reputation, as well as his real impact on China's economic development. So in that sense, we probably see he probably also considers this as important. And you have a very good point on that. He might be a new premier, but he is within Xi's inner circle. Right? He's handpicked. He's being super promoted to this position. So in another in a different and from a different angle, he probably is very closely allied with Xi's perspective on China-Australia relations, or in more broadly China and West relations. So in a sense, his perspective, whatever he conveys, represents very well Xi's perspective on this.
We have heard vocal opposition from Beijing when it comes to the security groupings, whether it's a Quad or AUKUS. How successful have these alliances been so far?
Yes and no, to some extent. The symbolic significance is there. The signal has been sent, has been set up and sent, received, heard. So in that sense, there's elements of success, and there's ramifications in the entire region. There have been formal agreements development to further down to detail all these things to be actioned upon, but there are more importantly the symbolic ramifications. It has changed security narratives in the entire region. It has changed different regional partners' general rhetoric and diplomatic rhetoric in the past, ever since Quad was established. And on the ground, I think there's way more room to work on, and in terms of policy coordination, in terms of military coordination, I think there's lots of room to further develop.
Professor, we're really great to have you with us. Feng Shiwu, who's the Associate Professor at the University of New South Wales. South Korea says sharing of any nuclear technology is its red line for cooperation between the North and Russia. President Vladimir Putin is set to make his first trip to North Korea in 24 years this week. South Korea's Defense Minister Shin Won-sik spoke exclusively to Bloomberg in Seoul about what he thinks Putin will get from Pyongyang.
푸틴이 원하는 건 포탄이겠죠. 미사일하고.
What Putin wants would be artillery shells and missiles. Putin is expected to seek closer security cooperation with North Korea, especially military supplies, such as artillery shells that are necessary to seize a chance to win.
물품에 대해서 북한에게 요청하리라고 봅니다.
In terms of the satellite, we saw North Korea's last satellite launch fail, and that's despite Russia's pledge for cooperation, space cooperation. So what's your take on that?
그게 바로 러시아의 엔진 최신의
They are exactly Russia's latest engine technologies. So our assessment is that North Korea has admitted to receiving engine technologies from Russia. In terms of why they failed, they have yet to secure reliability as they integrate North Korean engines and other technologies that they have developed with Russian technologies. North Korea is believed to be continuing engine tests at the moment, and we believe that they will try another launch in the second half.
How much North Korea is spending on launching these missiles from short range to intermediate range and ICBM? Do you have a breakdown?
Rather than speaking of the cost of individual missiles, let me give you an overall figure. North Korea fired around 30 missiles last year. According to a thorough estimate from the Korean Institute for Defense Analysis, known as KEDA, we would need some $1 billion in spending. The money is enough to cover North Korea's food shortages for a year. So in fact, North Korea is ignoring its people's hardships to carry out missile provocations.
So, Minister, Russia helping North Korea's military technology, that inevitably means greater threat for South Korea. So what is your red line in terms of Moscow's military cooperation with North Korea?
We consider the transfer of key technologies related to nuclear and missile programs as the red line, but it's something that needs to be decided together by South Korea and the US. There's no point in the South Korean government setting it alone. So we are having discussions to decide with the US and share with like-minded countries.
We're hearing that there could be another three-way summit between South Korea, US, and Japan. So in terms of the security cooperation, what is the priority for South Korea?
A priority would be to establish a system to more effectively, promptly, and coherently respond to North Korea's nuclear and missile threats among South Korea, the US, and Japan, and to make that irreversible. So during the last Shangri-La dialogue, we have decided to create a security cooperation framework amongst the three of us. South Korea has drafted a document and proposed to the US and Japan. The defense ministers of the three countries will sign it in the second half of this year.
Minister, China has accused the US of trying to build what it calls an Asian version of NATO. So what are your thoughts on that?
On China's concerns, I think it really depends on China's behavior. If all the countries in the Indo-Pacific, not just China, adhere to the rules-based world order, the rest of the world will not try to limit it. So the idea of an Asian version of NATO to me seems like a premature concern. But at the same time, I believe that the best way to dispel such concern is for China to give the Indo-Pacific region and the international community confidence that it will uphold the rules-based international order, and there should be no problem.
확실한 믿음과 신뢰를 인태 지역 나아가서 국제사회에 준다면 아무 문제가 없다고 생각합니다.
South Korean Defense Minister Shin Won-sik speaking with Bloomberg's Soo Hyang-che. We have plenty more ahead on the Asia trade. This is Bloomberg. You're watching the Asia trade. Take a look at Fancl, which is a Japanese cosmetics and skincare brand, which is now gaining more than 18% after a takeover offer from Kirin Holdings. The brewer, trying to shift away from beer sales, is now offering a takeover of $1.4 billion. And right now, the stock is trading above the takeover price. The offer was at 26.90 yen per share, which was already a 40% premium, and you can see the rally in the Tokyo session right now. Another stock that we're following, Japan's TDK. It's an Apple supplier and the world's largest maker of smartphone batteries. While it says its role in the AI boom is bigger than investors are pricing in, shares of the Japanese component supplier, now once famous for those cassette tapes, saw new highs this month, soaring over 30% year to date. I spoke to its CEO, Noboru Saito, in Tokyo about why he thinks their stock is undervalued.
Actually, we are really paying our highest attention on this AI, which will be impacting a lot on our future business development. Looking at the trend of digital transformation, we have a huge, huge opportunity to develop our value and provide our value to the society, customer society.
A big bulk of your manufacturing as well as revenue comes from China. How are you looking at other markets that could potentially rival that of China, including, say, for example, India, where you've been operating for years?
Yes, India. So, but first of all, I want to say that China is and also will be our very, very important market.
What are you seeing in terms of demand, though, given that we are seeing so many concerns about the Chinese economy?
Side of the market, is and will be continuously big and huge. Of course, we are looking at global. We are taking over our business on global basis. Therefore, our production kind of site strategy is China plus alpha.
Is that alpha also a big part of it is India?
Part of alpha is India in terms of battery business or electric device, yes.
What does that demand look like right now in India at the moment, especially given the little volatility that we've seen since the election?
From longer-term point of view, that local demand will continue to increase. That's how I see.
Most of your revenue comes from overseas, right? I wonder if that's helping you given that we have a cheaper yen, or because of also your manufacturing overseas, that sort of offsets it?
Over 80% of our manufacturing has been done out of Japan, and exchange rate issue is out of our control, right? Therefore, the important point for us is to keep developing our own capability. Wherever we manufacture, we should be able to keep improving our productivity or quality, etc., our own capability. This is the key point, from our point of view.
TDK CEO Noboru Sato there. Let's take a look at some of the corporate headlines that we're following. Meta will delay the launch of its AI chatbot in Europe indefinitely after regulatory pushback. The tech firm had initially planned to train its large language models using public posts generated by European users. Meta says the decision is a step backwards for European innovation and AI development. A spokesperson confirmed that Meta still plans to bring these products to Europe but declined to share a timeline. The Financial Times says Adidas is launching an internal investigation into allegations of bribery at its China business. It comes after a whistleblower complaint accusing staff of receiving kickbacks from external service providers. The whistleblower also claimed a second senior manager received millions in cash, as well as physical items such as real estate. Hyundai Motors' Indian unit has filed for an IPO that is expected to be one of the nation's largest. The car maker will offer 17.5% or some 142 million shares of Hyundai Motor India. The unit is not selling any new shares and the entire proceeds will go to the parent firm. Bloomberg earlier reported that Hyundai was seeking to raise about $2.5 billion. More on the Asia trade. This is Bloomberg.
You're watching the Asia trade. China's month-long 618 shopping spree ends on Tuesday. The festival invented by JD.com is a key test for e-commerce platforms. China correspondent Min Lo looks at how companies are convincing Chinese consumers to spend.
Rihanna making Shandong crepes. Apple offering its biggest ever iPhone discount. And an AI-powered avatar of JD.com founder, billionaire Richard Liu. All in hopes of standing out and getting consumers to spend. Similar to the Double 11 shopping holiday invented by Alibaba, 618 is JD.com's version of a month-long discount spree ending on June 18th. This battle for the consumer dollar has taken a hit in recent years as the slowing economy has turned Chinese consumers into more selective shoppers, making the price point for products even more of a focus.
Consumers are still buying. They're buying cheaper things. The average ticket size is coming down.
They are still going with some of the low price strategy out there.
Smaller companies are now competing in the same space thanks to China's anti-monopoly investigation into Alibaba in 2020. Douyin, Kuaishou, and Little Red Book have joined in the e-commerce game, Douyin leading the charge with 70% growth in GMV year-on-year. Alibaba and JD.com trailing behind in single-digit growth. The smaller upstarts have forced Alibaba to rethink strategy. Founder Jack Ma calling on employees to think outside the box. The result, a partnership with ByteDance's own Douyin, allowing merchants to advertise on the video platform and make transactions on Taobao. But even with the intense competition, consumer spending still cooled in recent months. And the platforms are hoping to reverse that during these key shopping holidays. Min Min Lo, Bloomberg News.
Take a look at how futures are trading at the moment as we head into a busy data dump day when it comes to China, as well as that decision from the PBOC on watch there as well. A50 futures looking pretty soft at the moment. Taiwan futures also off by just about 0.25%, and pretty flat when it comes to how we're seeing S&P futures at the moment. Cash trading at the moment on the lower side, concerns over that political crisis in France. We're seeing quite a bit of anxiety returning to global markets. We also do have a flurry of other central bank decisions this week as well. So we could see potentially more signals of delays to this long-awaited rate easing cycle, including a decision for the RBA this week. But that is it for the Asia trade. Our markets coverage continues. We look ahead to the start of trading in Hong Kong, Shanghai and Shenzhen. The China show is next. This is Bloomberg.